I just started to record the class. So um, if you don't know me, my name is Alexander. All right. So I am in charge of this class. Um, so I would like to just first and foremost introduce myself. My name is Alexander. Um, I've been with Traders Hub for a couple of years now, and I am one of the um, mentors for the company. Um, and for the amount of time I've been with the company, we've seen a substantial amount of progress in our mentees and our students and our alphas. The alphas are the people that have been with us before the Traders Hub rebranding. We've seen a substantial amount of progress in them. Okay, so um, all I want to tell you guys is that you guys should just be patient, have an open mind for this class, have an open mind. Um, just know that you have to be patient while learning this. You don't have to rush it. You don't have to go big or go home in your first year of learning. Now, there's a difference between learning and trading. If you start learning and after 1 month you start trading, that's not learning for you. You just started to trade. But if you are patient enough to give yourself a, a certain amount of months for you to learn comfortably without pressure, um, without stress, you take it easy and you go with the flow, then there's a high probability of you making more progress in this business more than people that have been trading for more than 3, 4, 5 years. All right. So that's basically what I just want to tell you. So again, my name is Alexander. I'll be in charge of this class. So now you guys can go ahead and drop your questions. I'll start taking questions from everybody. So please go ahead and drop your questions and let me see how I can tackle that. And also, if your camera is turned on, you can go ahead and turn it off. Uh, and also, if you have a question, you can actually raise your hand. There's a raise hand icon. There's a raise hand icon in your option, so you can raise your hand. And if you can't type, I'm going to unmute you. So if you can't type, I'm going to unmute you and you can ask your questions. Okay, so we have Ghost Time Ekemena, if I got that correctly. Um, I'm going to unmute you now. So if you have your question, please ask. And if you can't ask, please type in the chat box and I'll answer your question. So God's time, you can ask your question. I have um, let me unmute you. So unmute yourself and you can ask your question, please.
Hello, sir. My question is,
Um, who is talking?
Yeah, hello, Alex.
Yeah,
Okay, that's from the screen. That's from the chat.
yeah.
It's somehow a little bit darker. Please, can you just remove that's the dark spot so that we can see it clearly? Now, because from here it's
Can
somehow
you see it
showing
now?
yeah, I can see it, but it's still dark a
That's
little
my
bit.
that's my own. This is how my chat is. Except you want me to change it.
It's supposed to be at least somehow clear. I mean, like, like, well, it's okay. Well,
Who else cannot see
I,
my screen well? If you can't see my screen well, let me know. If Fortune is the only one having the problem. If you can see my
Screen
chat
is quite
well,
clear here.
the screen is clear. I don't know.
Oh, sorry, I think we should not use currency pairs here.
Pardon?
I said I think we should just use currency
Yeah,
pairs
that's
here.
what I'm going to be using for this class.
All right, thank you both.
Yeah. Okay. I'll start to answer questions now from the chat box. Um, Nasir, okay, Nasir raised his hand. Please unmute yourself and talk and ask your question before I go to the chat box and start answering questions. Nasir, if you have a question, please unmute yourself and ask before I go to the chat box and start answering questions. Okay, you don't have. Who is LL? Unmute yourself so you can ask your question.
So yeah, thank you very much. Basically, I want to know what we're going to be going over today's lecture.
Okay, basically, we're going over everything that you um, have difficulty in. Okay, so it's just for you to ask a question. Um, if you are a newbie, and when I mean newbie, you don't know the meaning of pips, pair, uh, trend, consolidation, range, um, structure, those are the common terms. If you don't know them, then I don't think this class should be for you because those are the basic that you should know before coming to the class. So I don't um, throw you off guard when I start saying pips, uptrend, downtrend, support resistance. If you do know support resistance, trend, um, pips, pair, um, currencies, then this class is for you. But if you don't know that, you can as well just leave the class because I don't think um, this class is for that. It's something you should have known before coming to the class. It's just like a prerequisite. Even if we didn't tell, it's a prerequisite that you should have had before coming to the class. So do you know them?
Yeah, yeah. Yes,
You
I
know
do.
the basic terms.
Yes, I do. Thank you very
All right, good,
much.
good then. If you have any question, you can type in the chat box then. Thank you. Um, Victory, unmute yourself and talk, please.
Oh, all right. Greetings both.
Yes?
Okay, can you hear me?
Yeah, your voice is faint, so speak louder, please.
Okay, can you hear me now? Can you hear me?
Yes, I can.
All right. Okay. Like for someone to say, I got a signal and I have an entry. Like, are they saying two different things?
Yes, a signal and an entry is different. A signal tells you that it's time for you to start looking for an entry. A signal tells you that, okay, this is the people that are in charge of the market now. Now it's left for you to look for an entry. A signal can be an entry, but you have to know what you are doing before that signal can be an entry for you.
Okay. If you can still illustrate it with a chart, like that
Yes,
would be more.
definitely I'll go over that. That's not a problem.
Thank you very much.
Yeah. So let me go to the chat box and ask and answer questions. If you've raised your hand, you can lower your hand and go to the chat box and ask the question instead. So let me go to the chat box. What time is the earliest time frame? That's Captain Eddie. He says, what time is the earliest time frame you utilize break of structure? One thing I should tell you is don't be attached to any time frame, to one time frame. But ideally, if you should start to look for um, structures, you have to know what you're comfortable with. If you're comfortable with the H4 time frame, then go with it. If you're comfortable with the H1 time frame, you go with it. But what I'll tell you is higher time frame over lower time frame. So if you are comfortable with the higher time frame, then you should go with the higher time frame. But ideally, H4 is you can see structure from H4. So if you're looking for breaking structure or how structure is moving, you go to the H4 time frame. Um, the next question is one, how to improve psychologically as a trader in order to improve the overall trading results. One, the psychology is, let's say it's like 80%. The skill is just 20% or even 10% off of that 100%. Then your risk and money management is another 10%. So the psychology is paramount. So you have to have the right psychology. So how to get the right psychology? You have to read books. If you can't read books, you have to um, engage in some type of personal development. And how do you do that? There are various ways. One is yoga, another is exercising, which is going to the gym. Another way is reading books. Another way is meditating. All right. So those are the simple ways that you can get your psychology right, because all of those are teaching discipline. They are teaching um, um, focus. They are teaching you to be focused. They are teaching respect. They are teaching consistency. So if you can be consistent in going to the gym for 3 months, then you can be consistent in following your trading plan. If you can be consistent in meditating for 3 months, you can be consistent in following your trading plan. If you are consistent in reading books for 3 months, the list is 3 months. You should be consistent in doing something for 3 months, at least 3 months, so you can so it can become part of you and you can move on to the next stage. But the easiest way is you combine meditating and reading psychological books like Trading in the Zone, um, The Complete Trader, uh, reminisce of a stock operator. Zero to hero. Zero to hero is about meditating. Uh, Trading in the Zone and the Complete Trader, or A Disciplined Trader, is by Mark Douglas. Um, Reminiscences of a Stock Operator is by, I can't remember his name, but it's talking about Jesse Livermore. It's the biography of Jesse Livermore. Okay, so those are books that you can read that can help you psychologically. And Zero to Hero is by Ivan Biji. I think was his name. Yeah, it's Ivan. That's his name. Um, so you can begin with Zero to Hero, then go to Trading in the Zone. Then you can also read some discipline books like the book by Jacko. What's his other name? I can't remember his name. All right. So cutting, like, the shortest way for you to become psychologically ready for to being a trader is by you reading and meditating. So if you want to meditate, you can use there's a free app called Headspace. All right, there's a free app called Headspace. You can download it, and it gives you free 10 days for you to learn how to meditate. And you can, if you want to continue, you can continue. If you don't want to continue, you can chill off. So you can use Headspace, and you can read Zero to Hero for you to know how to meditate. Then for you to become a disciplined trader, you have to read books, psychology books, which is A Disciplined Trader and Trading in the Zone by Mark Douglas, and also Reminiscences of a Stock Operator. I think those books will help you change your mindset to becoming a good trader or consistent trader. All right. So I'll go to the next question by God's Time Ekemena. Please, sir, my question is, how can one trade successfully without still losing the little money he has gotten as profits? And also, what are the best strategy to trade volatility index? All right, so one, I'll start again. How can you trade successfully without still losing the little money he has gotten as profit? One, if you don't know how to manage your profit, if you don't have the right money management and risk management, you will still lose. All right, you will still lose whatever the market has given to you. So you have to understand proper money management. So if you are risking 5%, if you are risking 5%, know that you are risking 5%. Now, if you've lost two trades, that means you are down 10%. Now, one way for you to get back is for you to reduce your risk. One, it's advisable you reduce your lot size. All right. So let's say you have $1,000 account, you are risking 5%, um, which is like, that should be about $50. Um, if you've lost twice, that is 10%, which is $100. And you need to get back, you have to reduce your lot size so that you can be um, so you can get your account back, even back to about 5%. So reduce your lot size, but still trade with sense. Use sense to trade so that when you are back to 5% and you are short 5%, you can continue from where you stopped, and you can increase, um, you can make more money as you go along. And if you are already in profit, it means you still have to be wary about how you trade. You don't take trades anyhow because you've been profitable for the last five trades or the last two, three trades. You've been profitable. You think that you know the blueprint of the market. The market will mess you up. All right. So you still have to apply um, risk management, proper money management also. Um, you should not go above 3 to 5%. That one will keep you in the game for long. So for you to be wrong, the market has to go against you 1,000 pip. If you are risking 5% on based on your account balance, you are risking 5%. The market has to go 1,000 pips against you for you to lose your whole money. So know how to do that in correlation with your account balance. So 5%, 1,000 pips blows your account. Know what to do with that. Then best strategy to trade volatility index. I don't think there's any anything called the best strategy. You have to. What I do is I trade price action. So um, I don't know if price action is a strategy, but I trade price action. So me trading price action makes it easy for me to trade whatever market I want to trade. So um, price action is simple. Understand what the market is doing, understand structure. Is the market trending or is the market is in consolidation? Once you know what the market is doing at the moment, then you can trade accordingly. So there's nothing like best strategy in forex or in the financial market as a whole. There is nothing called a best strategy. You still lose. So you have to apply your money management and risk management with whatever strategy you are using. Uh, those are the things that make you a profitable trader, not the strategy. It's how you apply the risk management, the money management, and uh, how you follow your rules, basically. And then Abdullahi says, advice on how to achieve consistency as a relatively new trader. For you to be consistent, you have to just know that this market is not going anywhere. This market has been going on for a long time. All right. They started with it started with um, cotton, I think. They started with cotton. They went to rice. They went to cowries. Then they now put everything in a category and say this is commodity, this is futures, this is stocks, this is bonds, this is forex, this is crypto. Um, Now we have synthetic indices. Then we had indices before. So you have to know that okay, for you to be consistent, you need to be patient and know that this market has been before your great grandfather was even born, and the market will still be here after you've gone. So you don't have to rush it. You have to just be patient, give yourself time um, to learn. And how to learn is to just ingest the right material, all right, the required material, the right material, and um, invest the required time, all right, put in effort, all right. Just know that there are some people that have been trading for more than 5 years, and you get to see their success now, all right. You are just getting to know how successful they are right now, but they've been grinding for more than 5 years, for more than 6 years. All right. So you have to be consistent and put that in perspective to know that, okay, if I don't give up and I'm ingesting the right material and I'm putting in the required efforts, then I will be like this person in 6 years. All right. All right. So that's basically how you achieve consistency. So also, I still talked about Um, I still talked about the personal development books. If you are not the booking type, you just have to find something doing that shows dedication, that shows discipline. If you are not the book type, you can start gymming. Go learn how to gym. All right. If you learn how to gym, and you give yourself 3 months consistently, and you just keep going to the gym, um, you'd see the progress. All right. So it's not hard. Just find something and do it. Just find something, then just do it. It's that simple. If you feel like giving up, remind yourself why you started. Daniel Oku, please, I appreciate if you don't write on my screen. All right, so Shamsuddin, Sani, how do you select the pairs to add to your watch list? What criteria do you look out for? Okay, basically, I think now is the time for me to start drawing on my chart. So basically, what I'm looking for is one, structure. What is structure? The market moves in structure. Forget whatever anybody wants to tell you. The market moves in three ways. Structure, and this is structure. The market moves in three ways. This is called an uptrend. How do we know it's an uptrend? Um, the market keeps giving us series of higher highs and higher lows. The market keeps giving us series of higher highs and higher lows. Then we know that we are in an uptrend. This is a downtrend as the market keeps giving us series of lower lows and lower highs. Then we know we are in a downtrend. Then this is called consolidation or a range bound market. Why? Because the market is giving us just lows and highs. No new low, no new high is formed. All right. So that is basically what I look for. So if the market is trending, I add it to my watch list. If the market is consolidating, I take it off my checklist. It's as simple as that. All right. There are other things I look out for, but the first thing I look out for is the trend. If the market is not trending, I don't look at the market. All right. I only look at the market if it's trending because I don't want to be caught in consolidation. All right. Everybody has a trading plan, so you have to know what kind of market you would like to trade. All right. So trend. It has to be trend. It has to be trending. Then Moses says, I'd like to know your thought process and approach before you decide to take a position. I mean, things like you like to see before you take a trade. Can't talk where I am, that's why I'm typing. All right, it's okay. I would answer that question, but let me see other questions that won't require me to go to the chart because once I start chatting, I don't think I would be looking at the chat box to answer questions. All right. So, is it advisable to trade on Mondays? Trade anytime. This question is from LL. Said, is it advisable to trade on Monday? There is no wrong time to trade. Trade when the market gives you opportunity. So, don't be in that ship or that back of people saying, don't trade when there's no session. Don't trade in bank holiday. Don't trade this one. Don't trade nenemi. Or more trade when the market gives you a setup. All right, you don't have. It takes more than $500 billion to move the market. You don't know when someone drops that amount of money in the market. You don't know. I've seen some bank holidays where the market moved mad, moved over 100 pips. What will you say? Trade when trade when the market gives you a setup. Don't trade blindly, but trade when the market gives you a setup. But if after 2, 3 days and you see that the market is consolidating, then that is when you stop trading. Please, Elo says, please, can you illustrate how to properly identify structure? Um, I'll go over that when I'm chatting then. Bashir Idris says, evening, please, best pair you've watched with low fundamental effect, if there's any. There's no pair that is low on fundamentals because all of them, as long as it's Forex, um, there's always a news that will move it. But you just have to know what pair um, moves mad, what pair, the peak value or the currency value and the currency, how do I put it? Just know that it depends on the peak value and how the currency moves. All right. So there are certain currency that don't move mad, but they only move mad when they have news. And they don't move mad when they don't have news. Um, e.g. CHF. So the Swiss franc is um, one of the most regulated currencies in the world. So those people, they don't move their currencies too well. So that's why you see USD CHF. The peak value isn't that large. It's not that as big as GBP JPY or EUR JPY or GBP NZD or GBP AUD. Those have some type of volatility. AUD USD, USD CHF, um, which other one again? Yeah, those two. EUR USD also, they don't move as mad as the other pairs. All right. So they are low. If you want to take it as that, they are low on fundamental effect. If that's the way you want to take it, because they don't move. But AUD USD move mad when they are releasing their unemployment rates, their employment rates, their interest rate decision, and that's their monetary policy. Uh, it moves mad during that time. So there is no pair as long as it's Forex that is not fundamentally driven. So all you have to do is understand your technicals and just trade it because the fundamentals and the technicals work pari passu. Um, Francis Namani says, what do you consider a good trading plan? Okay, what I consider a good trading plan. First, I've given you guys an intro. First, you have to understand structure. I have to know structure. Then I have to understand structure 2.0, which is there are different types of structure. Uh, there are different types of structure. There are double tops, double bottoms. There are different types of um, double bottoms. So I have to know what the market is doing. Um, there is head and shoulder. So these are structure 2.0. We have the head and shoulder. And we have the inverted head and shoulder. So you have to know where you are in structure, where the market is trending to. So because this is market structure, which is the trend, then you have to know what the market is doing inside this structure. Is it painting double bottoms or is it painting double tops? These are reversal patterns. Then overall, you can say the market is trending. This is an uptrend. This is a break in structure for a continuation to the down, for price to go down. So overall, this gives you a head and shoulder pattern. This gives you a head and shoulder pattern. All right. So that's that. Um, so if you know where the market is trending to, what the market is doing, then you trade accordingly. So for example, I'll answer your questions based on certain trades I took this past week, and let's see how we go from there. I think that should answer some of your questions. Okay, so I think this one gave me a projected about 50 pips. All right. So basically, I said I use H4 for structure. You can check whatever time frame you're comfortable with. Uh, so you can start from whatever time frame you feel comfortable with. All right. Christopher, do yourself good and stop writing on my screen, else I'll kick you out. Stop writing on my screen. Have some dignity and sense. So let's go. So I came to this chart um, during the week, and all I saw was some type of consolidation. But while the market was giving consolidation, it was giving some type of storytelling with exhaustions up, 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 up of the week. So it was giving some type of buyer's exhaustion. And when there is buyer's exhaustion, it only means that the market wants to sell. And looking at this market from this point of view, you can see that the market was going down, which is structure that I've said. We see some type of double bottom here. We have some type of breaking structure here. And we have some type of double bottom here for a continuation to the upside. All right. We see the market go up, go down, and give some type of breaking structure also for a continuation to the downside. We have a consolidation, but we still know where we are in structure. And voila, we have a continuation to the downside. All right. There's a way you can capitalize on how these markets are moving. All right. So we see that this market is in a downtrend. The market goes up to give 100% retracement. Who is that? Mute yourself, please. We see the market go back to give 100% retracement. How do we know that? How do we know that? Now look at it. If you draw your Fibonacci from lower high to lower low, you see that the market goes 88%, almost hitting 100%. And one thing you should know about structure is hold on. As long as the market has not broken this part, as long as the market has not broken that low, we are still good for an uptrend. The reverse is the case for a downtrend. The reverse is the case for a downtrend or a sell. So if the market goes down and comes back up, as long as it has not broken that high, we're still good for a low. All right. So looking at this market here, we see the market give some type of 100% retracement, and you can see the kind of rejection you can see from up there. You can see some type of buyer's exhaustion followed by an evening star. We all know what an evening star is. Morning star is the opposite. The sun rises in the morning. So when we say morning star, we expect a bullish market. When we say evening star, the sun sets in the evening and the sun is a star. So evening star formation, we expect the market to drop. So this is your signal. Now the difference between signal and entry, this is it. Now you have the market come back to give you some type of high, not a higher high, just a retest of your normal high, of your previous lower high to give you some type of high here, and we have candlestick confirmation for a downward move. So we see this. We are on the 4-hour time frame. All right, we are on the 4-hour time frame. So let's just go ahead and do something. Let me take this out. Okay, this is still good there. Let's say this had not happened. This also had not happened. This is not there. All right, this is all we have here. This is all we have here. This is all we have here. We have some type of demand zone. We have some type of supply zone. We see that the market has rejected from the supply zone. Let's go ahead and highlight this level so we see what goes on the lower time frame. Forget everything that has happened here. So let's go to the 1-hour time frame. Let's see what was happening. Now you can see on the 1-hour time frame that structure is working also on this time frame here. This is structure. You can see structure working on this time frame here. Now you have a signal, but that signal is not an entry. Remember, I said the market can come as low as this and still go back up. All right. Now for structure to break in an uptrend, the most recent higher low has to be taken out. For us to say we want to start selling, this is the most recent higher low. This higher low has to be taken out and giving a lower high before we can capitalize on it for a continuation to the downside. All right. So for us to say we want to start selling based on this market, based on that signal we got on the H4, this is the most recent higher low that has to be taken out. We can see that it has not been taken out. All right. We see it push back up and go down. All right. But before it goes back down, we see some type of bullish move. So let's go down on lower time frame to still see what's happening. Let me delete some of these lines. Let me delete some of the lines and okay. All right, this is where we are. We see that this market has some type of higher low up here. All right, that market has given some sort of higher low based on this level here. Based on that level, we see some type of rejection back to the upside. We see a rejection to the upside, and we see another break of that level. We see the rejection, we see it go back up, and a break of that level. Structure has been broken like that. All right. So then that is when you can look for your entry. This is the M30. You look for some type of entry, some type of candlestick confirmation to tell you that the sellers are now ready to take the market down. And what is that confirmation? It's called engulfing, right? So if you don't know what engulfing is just basically price action, price telling you that um, this is the amount of people, this is the people in charge of the market now. All right. So the market moves based on the amount of money in the that is floating in the market. So it's a power tussle between the buyers and the sellers. So if the buyers have more money, guess where the market will go? The market will buy. If the sellers have more money, the market will sell. It's as simple as that. So how do you know that the sellers have more money than the buyers? It's as simple as that engulfing. All right. You only know that the sellers have more money than the buyers when you see an engulfing candlestick. All right. So between these two candlesticks, that's called an engulfing. So let me try and draw it. Let me draw it here so you guys will know the difference. All right, so we have a bearish candlestick and we have a bullish candlestick. If the bullish candle closes above the open of the bearish candlestick, that is an engulfing. And we have here we have a bullish candlestick, and here we have a bearish candlestick. If the bearish candlestick closes below the open of the bullish candlestick, that is an engulfing candlestick. All right, there are also different uh, ways to know an engulfing. We have a bearish candlestick, we have a bullish candlestick here. As long as the market has not closed above this, it means that the sellers still have more money in the market, and as such, you shouldn't be looking for any entry to buy the market. All right, so we are in a bearish market, and also based on this little thing I just said, based on this engulfing, if you go on the 4-hour time frame, all right, you can see why it wasn't a good idea to sell immediately. Because why? Look at it. This is a bearish candlestick, but it has not engulfed the, the bullish candle. And as such, there was still some type of buyers in the market. But look at this here. Look at this wonder here. This is a doji. I don't count dojis as candlesticks. I don't count dojis as candlestick. So this is, add these two together and you get one bullish candlestick. Now look at this. Look at this wonder of God. You have that bullish candlestick and you have that bearish candlestick closing below the bullish candle. And what happened after then? We saw the market plummet. All right. So if you are the H4 type of person, this is your type of entry with your stop loss above structure. If you are not comfortable with H4 entry, you can go on lower time frames and wait for better entries so you can have good risk to reward and good money management. All right. So you can see that there was some type of break on the lower time frame. Let's go. Let's go. You can see there was some type of break in structure on the lower time frame, a retest, and you can see where the market went to from there. So you could have capitalized on this trade here. This could have been your entry. This could have been your entry with your stop loss above structure. This is 8 pips. This is CHF JPY. 8 plus 7, that's 15 pips as structure. And your take profit is for H4. Let's go. H4, which is this. You would have been gunning for this, which is minus 27% of the Fibonacci ratio. That would be 75 pips, and you are risking 15 pips. And you could see that the market went from that entry, the market gave you about 59 pip-ish, 59 pips profit from a 15 pip stop loss. And I don't know what else you want from the market. From that's proper risk management. All right. Then I took this, I took the buy. I took this buy, I capitalized on the buy. Why? It's because this was some type of demand zone and I could see double bottoms painting all through this point. And after I saw the structure holding, what did I see? I saw sellers exhaustion. You could see that the amount of the wick space below the candles can tell you that it's some type of seller's exhaustion. The sellers are getting tired. What that means is that they don't have enough power to push the market further downwards. They don't have the power to push the market further downwards. And like I was saying, I move based of structure. And what can you see here? You can see some type of double bottom here. It goes up, comes down to give you some sort of triple bottom, a break in structure on a lower time frame. This is breaking structure on lower time frame, you see double bottom, a triple bottom, a break in structure, a retest of that, and this this bullish engulfing. All right, bullish engulfing. If you draw your Fibonacci like this, boom, boom, you see the market rejecting off of 50% with a bullish engulfing. If you are comfortable with this, you can go ahead and enter your sell, uh, enter your buy, sorry, enter the buy with your stop loss. This is 9 plus 7, that's 16 pips, with your take profit on H4. Your take profit is always H4. Remember, it's always H4. And you have to understand where you are based off of structure. The market is still giving you, you are still in a down move, but you are just capitalizing on the retracement based on this demand zone here. So as long as the market has not broken structure, you don't expect the market to bust through this level. That's why I had my take profit back up at this supply zone here. All right, so looking at this, you could see that it was some type of effortless trade as the market just kept going in my favor. So you have to be patient. You have to understand structure. You have to understand what the market is doing on the overall time frame. Then you can drop down to a lower time frame. After dropping down to lower time frame, understand price action. Understand who has enough money, who has less money, so you don't get caught up in no man's land and get stuck in a consolidation or enter the wrong time frame or enter the wrong trade. There are certain questions. Can one comfortably execute a trade on lower time frame like M5, M15, and M30 after seeing candlestick confirmation on these time frame? Yes, you can. That is what I just went over. All right, so you can get a signal off H4, but that is not an entry for you. All right, if you get a signal off of a H4, the signal is, if the signal is not a bullish engulfing or a bearish engulfing, that is just a signal. It's not an entry, so you have to go work your way down to lower time frame to see what the market is doing and see if the market has presented itself to give you a an entry. Remember, before you enter, you have to know what the market is doing. The market has to give you structure. Like I said, if the market is not trending, I stay away from the market. So if I'm looking to sell and I don't see some sort of seller's presence in the market, I don't sell. If I'm looking to buy and I don't see some sort of buyer presence in the market, I stay away from the market. I don't buy until um, there is a reason for me to buy. What time frame do I take entry? I don't have a specific time frame. All right. You shouldn't be attached to one time frame. You shouldn't say I can't do 1 hour, I can't do 1 day, I can't do H4, I can't do M5, I can't do M1, I can't do M5 or M15 or M30. You shouldn't be attached to any time frame, or you shouldn't overlook any time frame. So all time frame matters, all right? All time frame matters. So you have to understand that you have to take into consideration all time frames. So if one time frame is not giving you what you want, then go to another time frame. You don't have to. If you see an entry on M30, take it. Your next trade, you see it on M5, take it. If you see it on M15, take it. If you see it on H4 and you are the H4 type of person, take it on H4. Understand your risk to reward, understand your risk tolerance, understand your money management. Once you understand that, then you can go ahead and place your trade and you're good to go. And if you've accepted the risk, if you're comfortable losing that trade, then go ahead. If you're not comfortable losing that trade, it means that you are either using the lot size you are not comfortable with. And if that's the case, then go ahead to reduce the lot size to a lot size that you are comfortable with. And if that's not the case, and if you are a money-wise type person, you are not comfortable in losing $100 on that trade, then work your way down to the amount of money you are comfortable losing. And if you are the PIP type of person, if you are not comfortable with a 40 pip stop loss, but you're comfortable with a 20 pip, a 15 pip stop loss, then you have to work on your precision and be patient for the market to give you an entry where you can use that um, amount of stop loss that you're comfortable with. So it's based on how comfortable you are with the trade. All right. So next question, if the candle before an engulfing candle has a wick lower or higher than the body of the engulfing candle, would you consider it an engulfing? There are different types of engulfing. I can't go in depth with that. That is meant for the Traders Hub. If you are part of Traders Hub, then you know the different types of engulfing candlesticks. But there are different types of engulfing candles. You can have one called the checkmate. There's one called the checkmate. There's one called the variation. Um, then there's the basic engulfing. So um, if you need to know that, if you want to know that, then you have to be part of the family. Uh, what's the lowest time frame you work with? The lowest I work with is M5, but I can toggle between M1, but I don't keep it on my chart. Do you look at daily, weekly, monthly chart? And if yes, how do you fit them into your analysis on the H4 time frame? Yes, I do that. All right. So example, example. For example, let me see, who do we have here? Okay, for example, let's take this for example. Come on, come on, don't do this. All right, so looking at this is AUD USD, all right? Let me delete some of these noise. All right, looking at this, this is the monthly time frame. Just looking at this, you can see some type of bearish pressure that the bulls have overtaken after the market broke this level. All right. So looking at on the monthly time frame, this is December, and you can see that it closed healthy bullish. That's a bullish healthy candle there. All right. I understand that the market is bullish overall on the monthly. Then I work my way down to the weekly time frame to see what's popping. On the weekly time frame, it becomes clear that the market is bullish, but you need to. There is always room for you to know where the market is heading to. All right, that's why you always need a roof or a resistance. So you have to, if the market, this is the closest resistance. If market breaks this resistance, then we can say, okay, the market wants to come here or come here. All right, so for now, we see that this is the most recent resistance that the market is rejecting off of. So what do? We draw the supply zone there and see how the market dances off of that level. And coming to this time frame, this is the weekly, we can see that this market goes high, close bullish, but this candle closes bearish. While it is bearish, you can still understand that the market still gave some type of higher low based on the candlestick. Now let me do this like this and drag and do something like this. All right, so you can see that this candle wick is a higher low. Even if it's bearish, it is higher low, and as such, the bulls are still in play. While the bulls are in play, you can see that the bears are still also in the market. So what does that mean? You might be in for a consolidation after this lower high. We have higher low, higher high, lower high. All right, based on the weekly time frame candlestick formation. All right, so we might be in for a consolidation, but this is a rejection of that resistance level, and it might give us an hint into what the market wants to do. So coming to this time frame, coming to the daily time frame, you can see what the market is doing. The market is consolidating. While it's consolidating, it's still giving you some type of high here, lower high, and another lower high. But still, your low is holding. And as such, the market can come down here and push back up. So you are in a consolidation, but while in a consolidation, you still have to know what the market is doing. So you go on the H4 time frame. This is the H4 time frame, and it becomes clear to see what the market is doing. Lower high, lower low, some type of lower high, but gives us a higher low. Here we have some type of higher high here, which is a break of that level, but we see the market go give us a low that is lower than the most recent higher low, which has been broken. Yes or no? Yes. And as such, while we are in a consolidation, you have to trade accordingly. While you're trading accordingly, you can see that the market is giving us lower low. What do we expect? We expect some type of lower high for us to capitalize and take our entry. So how do we know? How do we identify lower high? We draw our Fibonacci from the high to the low, and we expect the market to reject from PRZ levels. What are PRZ levels? Price reversal zones. 38%, 50%, 61%. All right. If the market comes to these levels from 38% to 100%, they are PRZ levels. We can expect the market to continue downwards. But since it's in a consolidation, we have to have our sights on where the market is currently trading at. All right. So we see the market going higher and higher. It keeps going higher and higher and has not given us any reason for us to sell. It first gave us a reason to sell off of this level after this bearish engulfing. After this bearish engulfing, if you had gone to lower time frame, If you had gone to lower time frame, you would have gotten some type of break-in structure here. You would have gotten some type of break-in structure here, which is a lower low. What do you expect? You expect a lower high for you to continue to sell. Now, what did you get? You got the lower high, which is why I said not it's not based on the strategy. You always lose. There's no best strategy. Now, on this, all the confirmation they checked off. Why? You have a lower high, you have an engulfing, a bearish engulfing, you have your entry, you have your stop loss. This is AUD USD. This is 4 plus 5, that's 9 pips, and you have your take profit at that low there. So you have a 10 pip stop loss for a 67 pip take profit potential. You can see that the market smashed your SL, so you are short one for the week. All right. Now, all you can see now is structure, 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 structure. This is higher low. Then you can see that the market kept on with the higher low levels until this one. All right. The market had a higher low there. We see a higher high here. We see a higher high here. And as such, this becomes the most recent higher low. We see the market come back to that place, rejected, which is what I told you guys. The market can give 100% retracement and still go back up. After it went back up, we can see the break in structure of the most recent higher low, which means we are short 10 pips for the week, but we have another opportunity to make money off of the market. So we have a break in structure. What do? We pull out the fibs again. And we want to see, what do we want to see? We want to see a lower high and a bearish engulfing. Now, this is it. We did not see any form of bearish engulfing. This is a doji. I don't classify doji as bearish engulfing. So this is a bearish engulfing. There we have it. We have the entry there. We have the entry there with the stop loss above structure. So this is a 14 pip stop loss for a take profit, which is H4 for a 96 pip take profit. And you can see how the market has been going. So we had some type of drawdown on this on the trade, which is about 9 pip drawdown, then currently floating about 48 pip profit from a 14 pip stop loss. So basically that's just how you do it. You just have to be patient and wait for the right moment. So if you are floating about 48 pips, it means that you've covered the 10 pip loss you took initially, and you are floating 30 pips profit for that pair. All right. So if you combine that 10 pips or the 14 pip stop loss with, that's your risk, you are risking 14 pips, that's your risk appetite. If you combine it with your money management and say, okay, I'm comfortable losing $14, then go ahead and put your 0.1 and you'll be floating in profit. If you are comfortable losing $140, then go ahead and you'll be floating about over $480 in profit. But if you are comfortable losing only $1, then I guess you'll be floating only $4 profit as this time as at this time. So it's based on your risk management in correlation with your money management. So if you are comfortable losing that, then go ahead and hit that lot size and go with the flow. But if you are not comfortable with it, then reduce your lot size to what you're comfortable with. But even before you start talking about your comfortability, you have to check off all this confirmation checklist, which is structure, breaking structure, structure 2.0, engulfing, and a continuation in the direction that you expect the market to go. All right. I think I've answered that question of do I look at the weekly, daily, and monthly before I go on H4. So Elvis says, what's the best time frame to trade a small account size? Like I said, there is no best time frame for anything. You have to just walk your way all through the time frames and see what time frame you are you see an entry, you see a signal, and then go with the flow. All right, so there's no best time frame for anything, whether a small account or a large account. You trade it the same way. Philip says, if you get a counter trend signal on your lower time frame, do you take it? If you are a newbie and don't know how to counter trend trade, then don't trade it, don't take it. If you know how to count, um if your hand is strong, if your hand is strong for the um trading business and you understand market structure, you understand price action, then go ahead. But counter trend trading is not ideal. But if you're counter trend trading, then know what you're doing, know where you are in the market, know where you are going to, so you don't uh, get caught up in the moment and get emotionally attached to a certain buyers um, other than the overall buyers of the market. This was the best way to draw your Fibonacci. Like I've been saying, bruh, there is no best way to do anything in this market. Ideally, in an uptrend, you draw your Fibonacci from low to high just to measure the retracement. Boom. In a downtrend, you draw your Fibonacci from the high to the low to measure the retracement for a continuation to the downside. Boom. That's the ideal way to draw Fibonacci. So there are different techniques to drawing it. Um, so you have to know the different techniques to know if you are drawing a Fibonacci for counter trend trading or you are drawing Fibonacci for the overall trend. So there are two different ways of plotting drawing the Fibonacci if you are counter trend trading and if you are drawing the Fibonacci uh, for the overall structure of the market. So um, that's that for that. But ideally, if you draw it the ideal way, there is no difference. There's no difference. It's just that pinpoint that you have to work on. How can one identify a trending market? Um, Simple. Understand what the market is doing. Is the market giving you higher highs or higher lows, or is the market giving you lower lows or lower highs? If the market is giving you higher highs and higher lows, you are in an uptrend. If it's giving you lower lows and lower highs, you are in a downtrend. How do you identify it? It's somewhat clear on the H4 time frame. You go on the H4 time frame and you just work your way to it. Simple. High, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, normal high, normal low, higher high, some type of break, lower high, higher low, some type of break. We had a break here. We had another break here. We have higher low, higher high, higher low, higher high, higher low, higher high, break, lower, higher, low, higher high, lower low. We can say lower high, but based off of structure and Fibonacci, this is how I want you guys to know structure. There are different types of retracement. If the market rejects from 23%, 23% is not considered a PRZ, and as such is not considered a higher low or a lower high. If the market moves off of this level, what you want is to just adjust your Fibonacci because it's 23.6. 23.6 is not a structure based. So you adjust your Fibonacci and expect the market to come to give you probably 100% retracement for a continuation to the upside. So if it comes back to give you 100% retracement, that gives you a 50% retracement of the Fibonacci, and that gives you a higher low. That's an identified higher low off of that market, and you can work your way up. But if the market comes down here, goes up, comes down, this higher low has been broken, what do you expect? Some type of lower high for a continuation to the downside. Simple stuff. It's as simple as this. You just have to understand what the market is doing. Once you understand that, you are 80% in the game. All right, let me see other questions. LL, if you, in your experience, what's the best level of the Fibonacci retracement to most likely look out for when trading? Like I've been saying, you guys just are just emotionally attached to something, and you're looking for the holy grail, and you're looking for the best, the best. Once your psychology is right, you know that there is nothing best. Um, there's nothing set in stone. But what is ideal is what is ideal. And in maths, we know the golden goose, we know the golden ratio. The golden ratio is 618, 1618, and that's the golden number. 1.618, 61.8, 161.8. Anything that has 618 is the golden ratio, and as such, um, If you are patient enough and you see the market rejecting off of the 61.8 of the Fibonacci ratio, you can look to capitalize off of that level for a continuation to the upside. All right. So if you want to be extremely patient and you see the market dancing around the 618 and it's giving you candlestick confirmation, remember, I never talked about the market, you just entering the market because it's at a certain level. You have to wait, be patient to see what the market does. If the market does not show you what it wants to do and you rush to enter the market, whatever you see, take it like that. All right. So you have to be patient. So patience pays. All right. Like Warren Buffett says, the market takes money from the impatient and gives it to the patient. So you have to be patient and wait, even if it's going to take you 2 days or 3 days. $1 profit is better than a 50-cent loss. All right, so it's best you wait and get a signal, get an entry, wait to see what the market is doing, wait to see who has more money than the other. You pull the trigger, you make your money, and you walk away. It's as simple as that. Adam says, I am still having problem using Fibonacci. Please help. Fibonacci is easy. All you have to understand is structure. You guys, my ear would on the bleed already from what I've been saying. Since morning I've been saying structure, structure, structure. Why am I saying that? It's because the market actually moves in structure. The market does not move any other way. All right, the market moves in structure.
Around the bone.
Who is that?
Not a G company.
Who is that? Mute yourself. All right. So, like I've been saying, the market moves in structure. So, if you understand structure, then you can make money anytime you come to the market. Simple stuff. All right. So, drawing Fibonacci is as simple as this. Understand structure. Understand structure. You can't draw Fibonacci when the market is not trending. All right. Even if the market is doing this like this, this is the initial fib that you drew. The fib is still active. All right. So even if the market is trending, the fib is still active until something happens. All right. The market can do this. And I've been saying structure, structure, structure. The market is doing this like this. The market is still bullish like this. Why? Because based off of structure, there has been no break in higher low, and the market is still giving higher low. And as such, this Fibonacci is still valid. Why is it still valid? Why? Because higher low has not been broken. This is higher low. It went up, comes back, but did not break higher low. Went up, came back down, did not break higher low. Went up, comes back down, did not break higher low, you are still in an uptrend. The market can still go up. The only way it becomes a downtrend is when the market does this. That's the only way the market goes down. But as long as the higher low is still holding, the market can still go up. But if the higher low breaks, what do you expect? You expect a retest of the higher low or 100% retracement of that level for a continuation to the downside. Any question? Any question, please? Does trading side? Mute yourself. Mute yourself. I'd kick you out if you don't mute yourself. Francis says, aside being consistent with trading, being present regardless of personal situation, does trading psychology involve any other thing? You just guys know what you're doing. The psychology is just for you to be confident, for you to be comfortable, um, for you to know for you to have a goal. If you don't have a goal, um, then you're just wasting your time. So for you to become consistent with trading, you have to have a goal. You have to know where you are going to. You have to know where you are coming from. You have to know what you are willing to do, what you have to let go of, what you have to start doing. And if you let go of the things that need to be let go of and you embrace the things that you have to do, then give yourself time and you become consistent. And then once you get that consistency, um, the psychology start tweaking itself, and whatever you want to do, you just remember that since you are consistent in doing this thing, why not continue? And you just find a way around it. That's why I said one of the easiest way is to read. If you are not the booking type, you meditate. If you are not the meditating type, then go the gym. Just go start gym and work out. Just work out, and because those three things help you with being disciplined, being focused, being confident, being consistent, being it helps you with everything. So if you are doing the three things, then that's a good that's a good more advantage for you. If you are doing only one, more grace to your elbow. All right. So Elvis says, you wait after a retest before entering. Yes, you have to wait. If it retests but does not give you an entry, and once it just retests and you are entering the trade, see, one thing I tell people and I tell my students is this: in this business, there is no competition. All right, you have $1,000 in your account. Someone has $10,000 in their account, and someone else has $100,000 in their account, and somebody somewhere has $10 million in his own trading account, and one bank somewhere has $10 billion in their own account, and there is one guy sitting somewhere, one banker sitting somewhere with over $500 billion in his own account. So you don't compete. If $500 billion is talking, you that have $1,000, you can't say nothing. You don't have a voice. So don't compete. Also, I say you don't get paid by by having a sniper entry. You don't get paid by entering the trade early. You get paid when you are right. You get paid in this business when you make the right decision, when you are correct. That's when you that's when you get paid. You don't get paid by entering the trade early or being having a sniper entry, or you don't get paid by you telling the market this market must buy because I am buying. You don't have the amount of money to move the market, so don't tell the market what to do. All you have to do is react from what the market shows you. And how do you react? You wait. All right. If you wait, you make money. You don't wait, you get caught in the crossfire. All right. Questions. I'm rounding off this meeting now. All right. I'm rounding off this meeting now. So questions. Advice on how to grow a small account. There's no advice for that. You have to be comfortable with what you are risking. If you have a $50 account and you want to flip it, if you are not comfortable losing that $50 account, you are not going to make anything. Instead, you are going to lose that $50. If you are comfortable losing the $50, that is one of the checklist. You've just checked it off. The next thing is wait for an entry. How precise are you? Work on your precision. Work on how you identify. Work on how you identify the market. Work on how you see the market moving, how you react to the market. If you react well, then you are good to go. I can't I can't give any advice of to grow a small account. If you are not comfortable growing and losing money, you are not going to make money. That's what I tell my students and I tell everybody. If you are not comfortable losing, then this business is not for you. Also, if you are looking for somebody to tell you that you keep making money and Forex is a get rich quick scheme, nah, we don't do that over here in Traders Hub. We tell you the truth. And if you are looking for someone to sugarcoat it for you, then you go meet other people. All right. But for we tell you the truth. If you are not willing to lose, then you can't win. All right? If you are not willing to lose, then there is no need for you trading. There's no need for you risking whatever, because you are not going to make a dime. Can I get a copy of the recording? Yes, the recording will be posted um, on the Traders Hub YouTube channel. So you guys will have to go watch it on the Traders Hub YouTube channel when we decide to release it to the public. Emeka says, aside from engulfing candle, what are the other signal candle? There is no other signal candle that we teach at Traders Hub except the engulfing. There are different types of candlesticks, but we don't teach all those because those are not going to make us money. There is hammer, there is shooting star, there is harami, there is spinning top, there is hanging man, there is, what is the other one? There are different candlesticks. They are not necessary and they are not what we need. They are not going to make us money. All right. All we teach for signals are engulfing. So if you don't have an engulfing, then that should, if you don't have an engulfing, then that should tell you that it's not even time for you to enter the trade. Elvis says, what's the significance of trading just news? Oh, man, out here we don't trade news. We don't trade just news. We are technical traders. So the news is just one of our confirmation checklist, or the news is just one of the things that push the market further for us in profit, or pushes it further in loss for us. L says, so your trading strategy is based on using only price action? Yeah. Not really. All right, but majorly it's based off of price action. So there are other things in the confirmation checklist like high frequency level, order flow, order blocks. Um, so those are just one of the things. But price action is the main thing that I look out for. Price action is what the candlesticks are painting. All right. So let me just tell you basically what price action is. This is it. This is what price action is. You see this candle here. Hold on. You see this candle here. You see that candle. It tells you what the market just did. It tells you that the bulls were in the market, but they could not hold the market enough. The bears dropped it down. Simple, that's price action. Price went up, but closed down. That's price action. That tells you that, okay, the sellers are in the market. You see a bullish candle, series of bullish candle, it means that the buyers are in the market. Price action. Then what do you see? You see some type of exhaustion up top. And what does exhaustion mean? It means that the buyers are getting tired. Look at the amount of wicks down and the amount of wicks up top. It's just evident that the amount of wicks up there is more than the amount of wick below, and as such is buyer's exhaustion. The buyers are tired. So you get an engulfing, boom, you enter. You see some type of drawdown. As long as you are comfortable with the SL, you don't adjust it, you don't touch it. The market goes the way the market wants to go. All you have to do is wait and see what the market is doing. Gospel Nnamdi says, how can one join the hub? Okay, if you want to join, send me a message on, mute yourself, please. Send me a message on IG and Twitter. This is my username on Twitter and IG. That's my username. So send me a message and will get you on board. All right. And if you also text me on my IG and Twitter, there is a website there, so you can go on the website. Once you go on the website and you click mentorship, this is the website, Traders Hub. Hold on. Tradershub.ng. This is it. I think the website is under construction, I think. But once you come in here, there is a section for mentorship where you get to see the other mentors in the company. So Forex course is different from mentorship. The Forex course is just you having access to the course, the materials. Then the mentorship, you get to choose between different mentors in the company, and they get to help you in your journey. They get to help you in your journey to learning the Forex or trading as a whole. Okay, so that's my IG, that's my Twitter. You can follow me. You can follow me on IG and Twitter, that's it. So then message me and we can get you on board to the company. Then Kevin says, boss, when oh boy, wow. When Fibonacci is drawn, hold on. When Fibonacci is drawn, and we don't get entry on PRZ level, can we get 100% retracement? And does it occur on consolidating or trading market, or both? It occurs in both. And if you don't get an entry on PRZ levels, it means that the market might want to go to 78, 88, or even 100%. And if it goes to 100%, all you have to wait is for another type of break in structure for you to continue the downside. Example of that is GBP JPY. All right. We've been looking for the sell since. We got a signal to sell. All right. But we have a lower high. a lower low. What we expect is a lower high. We've not seen that lower high. So what are we seeing? We can see that the market wants to go for 100% retracement. If it goes, good, we take the sell. Also here on the overall stance, we see a break in structure. This was some type of consolidation, 100% retracement, a break in structure, a lower high, and if you had want to take an entry there, you would have taken it, you would have made profit, but you'll be floating in profit. You'll be floating at break even right now. But still on still, before I look to sell this market based on whatever it's been doing, I want to see some type of break of this level and a lower high for a continuation to the downside. Can you recommend a broker and what you look out for while choosing one? All right. What broker? Hot Forex is good. IC Markets good. Xness is good. What other broker? Robo Forex. I don't use much brokers. What I use is IC Markets, Hot Forex, and Xness. All right. So what I look for is what I look for brokers. One is their certification. All right. Where are they certified from? Um, like IC Market. IC Markets is certified by the SEC from Australia and also in Seychelles. Xness is certified by, is it the SEC in Cyprus, and Hot Forex also. Then there are others. So if the broker is not regulated, that's one number. That's a red flag for me. So if it's not regulated, it's a red flag. If the withdrawal method, if they don't have um, international transfer, it's still a red flag for me because it's just international bank transfer seem somewhat safe. Um, then if they have cryptocurrency, that's a bonus. Um, if they have um if they have Netella Skrill, that's a bonus. Um, then the spread, the spread after the regulation um, and the withdrawal method, the spread is the next thing I look out for. If the broker does not give good spread, I don't care about what they want to give. If they want to give me $100,000, I don't care. As long as the spread is not good, I'm not comfortable with widespread. That's why I don't use certain brokers. So I use ICM, IC Market because the spreads are very good. Hot Forex also has good spread also. What else? Who else? Xness has nice spread also. Uh, Robo Forex has a good spread also. All right, so it's just based on how much you are bringing to the market. Which do you recommend, MT4 or MT5? I don't know. Anyone that makes me money, both make me money. So I don't know which one. I don't know. I don't know the debate between MT4s and MT5s. Whatever makes me money, I'm cool with it. I'm not here to choose sides, which one is good, which one is bad. I'm here to make money, so you should do that also. All right, this is the website. You get to choose between Afolabi, Damola, myself, Bafa, and as the mentors. Then just choose out of us, and something new has been added. When the time comes, you get the info about it. So the website is tradershub.ng. Um, the forex course goes for $100. It has access. You have access to full course. There is no monthly subscription. It's a one-time payment. It's for beginners, lifetime access to the course, but there is no mentorship. There's nobody that would be answering your questions if you do have a question. So that is why we advise to go for the mentorship. So if you go for the mentorship, you get to choose between 4 mentors. And once you choose between the 4 mentors, uh, the 4 mentors are going to be 24/7 answering whatever question you have. Victory says, what causes the sudden increase in spread as at 9 p.m., please? 9 p.m., 10 p.m., it's mostly 10 p.m., 10 p.m., 11 p.m. It's because it's a rollover. A new trading day has started. It's 8 a.m. in Australia, and as such, the market is rolling over to a new day. So that's why it's always like that. Manasseh says, mine is not a question. I just want to thank you for doing this, even for non-students of Traders Hub. Thank you and more peace. Yeah, thank you. I appreciate. Namaste. All right. So, any question? Just to buttress more on Victory's question, 8 a.m. in Australia is a new trading day, and as such, the market is rolling over to a new trading day. So there will always be um, an increase in spread just to accommodate new orders and whatnot. Mohammed says, thank you, Alexander. Thank you too for attending. Gospel says, how long have I been trading? I have been trading for a while now. Professionally, I started trading June 2018. Professionally, I've been trading before then, but professionally, 2018, June 2018. Thank you, boy. Thank you guys for attending. Um, so make sure you guys follow us um, on social media. Let me go ahead and drop it. So on Twitter, it's at Traders Hub NG. Twitter and Instagram at Traders Hub NG. We have then we have at Yusha Mindset, and Okay, so make sure you follow us, tag us. Make sure you just follow us, tag us, and um, show some sort of appreciation, and so people can see what's going on over on Traders Hub. And we would like to see you guys come join us. Um, for the Traders Hub guys here, um, thank you guys for attending. For the non-Traders Hubites, thank you guys for attending also. Um, I pray you guys make more profit this year, and it's up from here on. And 6 months from now, you guys can um, you guys can give some type of testimony after attending this class and knowing that there was some kind of impact you got from the class. And we would like to see you guys over at Traders Hub so you can learn more advanced stuff and gain more gain more knowledge, not even trading wise, psychology wise also. And we have a lot coming. Um, we have a lot coming for the year, so we would like you to be with us and uh, follow us on our journey. Also, as we help to alleviate a lot of people out of poverty and change a lot of mindsets about the forex and the trading business as a whole. As a lot of people think it's a get rich quick, as a lot of people think it's some type of networking, um, and it's some type of Ponzi scheme. All right, so we would like to um, get you guys on our side, change your mindset about certain things for you to know that it's not a Ponzi. We don't do MLM here. We don't tell you to bring this one, bring 10 people so that you
1,000.
mute yourself. So we don't tell you, all we care about is you to learn how to trade, make money, and pass that knowledge down to your next generation and keep helping people and passing that knowledge as it's a generational wealth that we are teaching. And we'd like to see you guys over. Someone says, boss, just so we debunk some curiosity, obviously the membership fee adds nothing relative to your income. So what's your goal reward for running the mentorship program? Everybody has their own reasons. For me, um, I feel I can't start going and start dashing people money up and down. I did not make my money like that. So there's always a price to pay for you if you have the zeal, if you have the curiosity, if you have that enthusiasm to want to live where you are. I'm not trying to be motivational, but I'm just trying to say if you are tired of what you're doing or where you are and you like to step up and you are goal driven, um, for me, I would always like to see people that are goal driven and they want to move forward and they want to move on from where they are, um, and they are ready to put in the work. They are ready to put in the effort. There's just a simple price to pay for that, and having a mentor is one of the ways for you to um, cut the long road, for you to have fast experience from the market because your mentors have made that mistake for you. So what they do is to tell you how to not make that same mistake. And I don't like to see people making mistakes over and over again. So I try as much as possible um, to be of help to them, and that's why I joined Yusha within the company and to see how we can um, bring value to people and not allow them make a lot of mistake, take wrong steps, and not allow them to do things they are not supposed to do. So being a mentor is just because I like to see I like to pass value, I like to impact value, I like to give value. I like to see people live where they are to better place, and I like to see goal-oriented people move forward. That is why I chose to be a mentor. If not that, I'll just be low key and just doing what I want to do. But the goal of Traders Hub is to alleviate a lot of people from poverty and from not even poverty, take people out of where they are and take them to where they want to be. So that's why it's called Traders Hub. It's not only a forex academy. It's a big goal that we have in store. So it's not only going to be forex. It's going to be a lot of things. So we would like to have everyone on board with us. What's your advice on the raw copier? I think it's good. I've not I'm not part of the team for the raw copier, so I don't